well, distinguished guests, leaders. I'm very happy to be here, join this platform to share some of our research results. And this report focuses on the inclusive and integration of Fintech. So let me first talk about the background, and then some of the main points on this report from the perspective of a third independent party. The reason we are formulating this report is because everyone has great incentives to try Fintech. In A, B, C, D, 4 types of technologies, everyone was very enthusiastic. However, in the process of exploring them, actions were lagging behind. And that was not because of capital or lack of talent, but due to the results of trying was not very effective on some single point. And we didn't have a very clear direction whether we should self-develop a system or we should just use off-the-shelf, employ other service providers. We don't know where we should put our resources in. So actually, Deloitte has a very close relationship with the World Economic Forum since 2015, and we started looking into this area. Each year, we would issue a report under a specific theme. Since 2015, that was about the future financial services. All the way to 2018, AI reshaping financial services, and this year, it's integrated technology, the next innovation. Throughout the process, we have investigated and interviewed 81 institutions and more than 500 experts, holding more than 55 offline forums. And today, this is the first time for us to release our Chinese version report in parallel with the English version. And this is a concise or shortened version. If you wanted to look at a complete one, full one, you can go to our website and then download it. It is very lengthy with hundreds of pages analyzing the 4 types of scenarios of integrating technology with the industries, including how the financial industries can make use of these innovative scenarios and our recommendations. The report has subcategorized some business models in the fintech sector, including payment. Now I'm about to delve into the details. The 4 innovation directions. In this report, our exploration was not about isolated ABCD technology application scenario. We actually look them as a group and divide them into different combinations and look at these innovations of these technologies and how can they be used in each scenario. However, we find a commonality, that is AI is the centerpiece of all the combinations. So AI is a necessity for these innovations, and that's very easy to understand, of course. Basically, there are 4 types of differentiated development path. Let's look at each of them. First, how can we support a trans-finance ecosystem and the building of it? In the past, we have carried out many trials, but however, there's many limitations such as joint modeling, data sharing, and then we build some cross-finance models. And in the future, we will make it more effective. For example, with better privacy protection technologies and with these federated learning approaches. With another example is using distributed storage to reduce these difficulties and barriers. Actually, these are already existing in many scenarios. For example, in insurance. Now, everyone knows that the insurance model is based on the chances of usage or the rate of your ratio of usage. So your historical record matters. Otherwise, everyone is buying a package for the whole year for your car. But we notice that your driving habits and the geographic locations you are using and how many days you are driving, these data are going to make a difference. For example, we use applications to collect your driving habits, and these data will be used to define your car insurance price. That's the first one. And second, the integrated innovation will make a integration between the physical world and the virtual world. In the future, the financial products will be better embedded into people's life and production. Banking 4.0 is a term that everyone is getting increasingly familiar now. Banking will be everywhere, will be ubiquitous in the future. And they may come from the interfaces surrounding us in our life and in our work. So these banking services will have a seamless connectivity with our real life. And there are many terminal computing hardwares plus AI. They're going to be powerful.
So by 5G and AI, we could monitor and analyze the things in real time. We could collect data and interact with these things in the real world. And we can see a lot of application already in place in the financial sector. For instance, let's take loan as an example. Normally, the bank would give the entire amount of your loan to the user. Well, this may create several problems. One, this may cause higher interest because you may not need to use the entire loan at the initial stage, but you need to pay the interest. And secondly, the risk is higher because once you get the loan, you may use the money for another purpose. So that is why we invented this new product in credit. That is called dripping loans or drip irrigation loans. So instead of giving you the money in a lump sum way, we give you those loans in a step-by-step way, like drip irrigation. So for the clients, they could enjoy lower interest, and for the bank, the risk is lower. So this is mutually beneficial, and that's how we combine finance and technology. And for the clients, the banks will not only show in their mobiles. They will not only have mobile banks, but they will see banking services embedded in every part of their daily lives. And we want to talk about reshaping the trading transaction, for instance, cross-border payment and cross-border transfer. Well, there may be lots of parties in this process. So the efficiency, the traceability may all be pain points. But with a distributed ledger with blockchain, we could try to do disintermediation. For instance, the payment originator could exchange the fiat currency for digital tokens and launch the quotes, the information of the counterparties onto the blockchain. And on that blockchain, the central bank will be able to match different trades. Along the chain, there may be numerous codes and numerous trade information. So market maker will be able to match different parties and then convert the digital token back to fiat currency. So the cost of transaction will be lower. And that's one of the possible applications of fintech in overseas, in cross-border payment. And moving on to talk about quantum computing. We not only use quantum computing in, say, constructing models, but in many other aspects. And with the development of quantum computing, the accuracy and the efficiency of trading will be greatly improved. What used to take probably days or hours may be done within seconds. Well, we see that earlier last month, we had a great improvement in the computing power of the supercomputer. So what used to be unimaginable now is possible. For instance, 2 years ago, Reshaping, a famous company in quantum computing, is already working with banks and financial institutions. They use AI and quantum computing, and within the same amount of time, the profitability of the trading portfolio was raised by 5%. So I just talked about several aspects of the possible application scenarios of using AI and emerging technologies. But what specific impacts will such technologies have on the banking sector? Well, first of all, the business pattern may be transformed, may be disrupted. To put it simply, what used to work may not work anymore. And secondly, problems that cannot be solved in the past can be solved by using new technologies. And thirdly, now you've get rid of those old problems, but such technologies may give you new issues. The first part, what used to get you there, what used to get you here won't get you there. On the left, you can see that, say, you may have a innovative product, you may have exclusive channel, you may have exclusive client. This used to be your advantages, but it may not be so in the past. And in the future, those who used to have ABCD, those emerging technologies embedded in the system may be leading the industry, but in the future, such artificial intelligence, blockchain, etc., emerging technologies may be just standard for players in this industry. So the banking industry will have an era of all-time or all-process customization. So this will reshape the industry. And during this process, banks, financial institutions need to think of new organizational structures. For instance, in the past is back desk, front desk, middle desk, and etc. Perhaps in the future we'll have some new structures. In the future, maybe we will center around some ecologies, or for instance, we may need to join some camps instead of banks competing against each other. Maybe we are competing. Maybe it's camps competing against each other, or different sectors, different clusters competing with each other. The second is about capability. Say, for banks, how can we integrate our banks with third parties? How agile can you be? The third is about CRM. Regardless of technology, eventually the profit comes from your clients. The profitability will never come from your products or your technology, but from your clients. So how can you win the trust of your clients, and how can you deepen your relationship with your clients? Why would clients want to spend more time with you? For instance, you spend a lot of your time per day on TikTok, on WeChat, and etc. Why so? Because these applications, they know you. Well, you need to know your clients so that clients would want to spend time with you. So the first change is that the competitive logic would change. And secondly, things that used to be difficult will not be difficult anymore. For instance, compliance, talent, data. They may not be challenges anymore thanks to the technologies. That's, for instance, big bank or a small bank. They often don't dare to say they have sufficient data. They perhaps only know, say, what's happening to their clients in a quarter of the times. But in the future, federal learning or enhanced confidentiality and etc. may make co-modeling possible. So we could solve problems that used to be impossible to solve. So the second is about overcoming barriers, and third is new challenges. Here I've listed a few. For instance, quantum computing breakthrough cryptographic algorithms. When the computing power could reach 100 trillion times, then the quantum computing may be able to break through your cryptographic algorithm. If that's the case, then what should you do? And the second is about real-time feedback. If the feedback is not accurate, or if the feedback is fixated, what could you do? And also we have concentrated risks. For instance, we talked about integrating abilities, putting different ecosystems into one cluster. When they rely on one set of logic, then we may see some concentrated risks or some systematic risks. Do we have any relieving or responding methods, responding plans? And moving on to talk about the herd effect. Whatever method you use, your target may be still the same with, say, the target of other institutions, say the affluent. And you may constantly be harassing your clients. And this may also cause amplifications of market signals, and may cause market stampede. So we need to get prepared. The first is focus on technical integration. We need to understand technologies from an integrated perspective. And also we need to focus on clients. We need to be client-driven. What do they need? Where do they want to be? How do you want to interact with your clients? And thirdly, we need to work together with regulators. We need to have transparent cooperation. And also we need to be agile. Instead of reinventing wheels, we need to join hands together to do some new things. This is the download link of our report. You could have the full version. It's about 100+ pages. And We studied 80 plus companies, and we also have a lot of cases in this report. It's very detailed. I only give you a brief summary today. So I welcome your comments and your suggestions. That concludes my presentation. Thank you.